Intel just reported earnings and the stock is down roughly 1.6%. You guys know I'm not a owner of Intel, and while maybe previously I've been more of in the bearish side, I do believe things are getting a little bit more bullish for the company. I'll explain a little bit more of what they had to say in their earnings presentation, and maybe later tomorrow I'll do another video talking a little bit more of what they're doing in their earnings call, because usually in their earnings call they do share some great insight. So overall, we can see total revenue was $11.7 billion, and this was down 36% year over year. Some people might be wondering, hey, Jose, how can the revenue be down that large or by that amount and the stock price barely moved? Main reason is this was expected, right? We are in the midst of a very huge inventory correction, and Intel is a big player here. We also know that Intel is losing market in the data center side, so obviously we are expecting this kind of decline, and that's why the stock price barely moves. Their client computing, which is their consumer products, was down 38% year over year. Their data center and AI market was down 39% year over year. Their network edge was down roughly 30%. Their mobile eye segment was the only segment up 16%. Even though mobile eye is an individual company now, Intel still holds a huge amount of position in that company. Then their foundry business was down 24% year over year. But that's a very small portion, right? The main drivers here, in my opinion, are going to be that client computing and that data center market. So I want to take a closer look at their Q1 financial highlights and then take a closer look at their outlook too, just to see what kind of at least positiveness I'm seeing for the company. So like I mentioned, Q1 revenue was 11.7 billion. It was down to 36%. Unfortunately, earnings per share was a loss of 4 cents. So this is, they do mention that, hey, this is better than the outlook they previously gave. For example, their revenue was up $0.7 billion above January's outlook at midpoint, and earnings per share, even though it was at a loss, it was 11 cents above January's outlook. So they're saying, hey, things are bad, but not as bad. But I want you to remember that $11.7 billion in revenue, and I think this is what at least could be a nice silver lining for Intel. So for Q2 outlook, they expect $11.5 to $12.5 billion in revenue. Unfortunately, that is down 22% year over year at midpoint. And you might be like, Jose, how is this great news for Intel, right? Another year, another quarter expecting huge decline year over year. If you are familiar with the semiconductor market tends to be very cyclical to some extent, right? A cyclicality that kind of goes up, but it is cyclical to some extent. Normally, one way to kind of witness where we are in the market is to kind of see that quarter over quarter segments. And if this Q1 was 11.7, and on their bottom end day for Q2 they expect 11.5, then that to me tells me that, hey, we're somewhere near the bottom. We might have passed the bottom. The real question is where we're at. Have we still not passed the bottom, or have we passed it already? But it does kind of show us that there is some flatlining happening with Intel at the moment, and I do believe investors could be very excited about that. We also see that, hey, earnings per share, even though it is expected to be at a loss, is going to be a loss of 4 cents, so a little bit better than this quarter again. So again, it can just kind of continue to show for Intel investors that, hey, the worst for this company has passed. And that's the main reason why the stock, as we are looking at it, hasn't really moved much. We can see the stock is down roughly 2%. But like I mentioned, 2% on things like this, it might surprise a lot of investors.
Discover the world of semiconductors without getting lost in the technical jargon. My new membership offers a perfect balance for investors looking to understand this exciting market. Using my electrical engineering knowledge and experience, I will release weekly exclusive videos ranging from quick 5-minute 101s to in-depth analysis, covering not just popular chip stocks, but aiming to explore every public semiconductor. Plus, join the private community of like-minded investors. Finally, I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
A few other things I do want to mention. If we take a closer look at their segments, unfortunately, things are down. We can see they're barely making money. Their client computing group, this is the market that's getting hit a lot by inventory reductions. It's barely profitable. I'm actually shocked that it is profitable. Their data center market, it is at a loss right now. The main reason it is at a loss, though, is if you recall, this is the first quarter where they're including their GPU products in here as well. If it wasn't for their GPU products, I believe this would have been flatlined just like last quarter, I believe. But we can see this revenue was down 39%. They do mention that the total addressable market is contracting, and obviously that competitive pressure. And we all know who that competitive pressure is, AMD, baby. So things are looking, again, right? Things are not the best, but they do give us some kind of insight of what to expect. So now let's take a closer look at some of the summaries that executive gave. First, they do expect a modest second half 2023 recovery. So again, we're seeing that, hey, we're very close to the bottom in revenue. That's a great sign for a company like Intel that depends a lot in inventory corrections. They also mentioned that in the long-term strategy, they do remain on track to regain transistor and power performance leadership by 2025. So they're saying, hey, AMD, congratulations, you guys are kicking our butts so far. But when it comes to 2025, we will be the leaders again. Remember, we are in 2023, so it's only 2 years from now. The way they're trying to do that is by their process and manufacturing. They expect 5 nodes in 4 years. Intel 7 is in high value manufacturing already. Intel 4 is ramping up. They do mention that in the data center market, Emerald Rapids, which is going to be their 5th generation of data center solution, is expected for Q4 of 2023. And then they have Sierra Forest in the first half of 2024. So they're definitely going to be shooting the market, the data center market, with some strong solutions, hopefully. So that could bode well. In the consumer market, they do mention that they gain market share here in Q1 of 2023. They do expect Meteor Lake in the second half of 2023. So that's also going to be interesting to see how this company evolves in the consumer market. And obviously they have more kind of products down the line. I don't think there's anything too crazy in their Intel Foundry business. They did announce a partnership with ARM to accelerate the ecosystem, and they are working to close that tower acquisition. But I don't believe there's anything too crazy to talk about there. They do talk a little bit more that, hey, PC inventory correction is still as expected, and they continue to see year-over-year server total addressable market contraction. In the long term, though, they expect PC usage to remain strong and to lead a great kind of rally for them in the future. They also expect that to be a huge compounded annual growth rate for server CPUs, obviously thanks to AI tailwinds being one of those pushes. So overall, like I mentioned, not the best earnings, but it is not the worst earnings. And for semiconductor investors, those might be good earnings. The final thing I want to take a closer look at before I close out this episode is look at their financials. Unfortunately, this company is burning cash. We can see net cash provided provided or used by operating activities was a loss, or they were burning about $1.8 billion in cash by operating activities this quarter versus a nice gain last year of roughly $6 billion. So that's taking quite a hit. It does seem like they took out about $11 billion long-term debt. So this company is kind of increasing the debt, most likely to kind of build on that manufacturing side of their business. Now, if we take a closer look, I just wanted to look really quick at their client computing. I thought the desktop market was a big player for them, but we can see the notebook market is the biggest portion for them. And because the notebook market is so weak right now, that's where they're taking heavy hits. The final thing I wanted to take a closer look at is free cash flow, right? Adjusted free cash flow this quarter was a loss of $8.8 billion versus roughly $5.6 billion profits, positive free cash flow a year ago. So we can see it's definitely not the best time to be an Intel investor in the historical levels, but if things are turning around, this might be the bottom for the stock. We can see the stock is now probably sitting at $29. Yep, sitting $29 after hours, and it kind of bottomed at around $25. With these results, I'm not going to go out there and rush Intel, but I do want to say there is some reasons to be bullish in this company. So let me know your thoughts. Are you buying Intel at these levels, or what are you doing? Take care, have a good day, and see you next time.